All right, good morning, trade pros. Welcome to our morning market update for Tuesday, August 21st, 2018. We had a little bit of connectivity issues, but we're up and running here. It's a rainy, gloomy Tuesday here in Toronto, which Victorio prefers. He loves these days, he said. So today's going to be his day. You're going to probably do the best trading. In today's morning market update, we're going to talk about a few things, why the dollar's weak and what Donald Trump said to cause that. In addition, we're also going to review a record that's going to happen for the S&P 500 today, and we're going to talk about gold. Is it the right time to buy gold in the next several days to about a week? All right, so let's jump right into it, and let's start out by doing a little tour around the world. In Asia, Japan's up 0.1%, Hong Kong's up 0.6%, China up 1.3%, and India flat. So Asian equities, for the most part, slightly bullish, but they've lost some of that momentum over the last couple days. And we are, however, still getting a bit of a rally and follow through. All right, equities globally are helped by this one thing that's occurring. Hey, Marky's down there. So let's talk about Europe. At midday, London's down 0.4%, Paris is up 0.7%, and Frankfurt's up 0.7 as well. European equities have gained some momentum in the early hours, and in the United States, the futures are up as well. Dow Jones up 0.2, S&P up 0.2%, and then also the Nasdaq up 0.3%. So some moderate gains in the U.S. session as well after a very positive day yesterday. All right, let me talk to you about the U.S. dollar. So Donald Trump yesterday said that he is not thrilled with Jerome Powell's decisions to continue hiking interest rates. Basically, Donald Trump appoints the person at the head of the reserve, all right, the Federal Reserve. So Janet Yellen and now Jerome Powell, they're the chairwoman and now chairman of the Federal Reserve. They are appointed by the U.S. president. It's the only appointment that's made by the U.S. president himself. So Donald Trump saying that about Jerome Powell is a little bit like your boss saying, I'm not thrilled with what you're doing. And he says that to the media. All right, so him saying he's not thrilled, the market assumes, well, if he's not thrilled with it, what actions is he going to take and how is he going to speak to Jerome Powell to maybe change some of their current policy at the Federal Reserve? At the moment, the Fed's been raising rates and continues to raise rates, and that's a hawkish outlook. However, Donald Trump saying this shows his disapproval of the current strategy, which means, is there any likelihood for the strategy to change even a little bit? And if it does, that means a lot of money has to change hands and reallocate into different assets. That being said, whenever there's less interest rates hikes in the future, that translates to a weaker U.S. dollar. So the dollar was pushed lower on that news, right back down to 95.50 on the dollar index, right back to the level that it broke out to the upside from on August 10th. So we've lost all the momentum and gains of the past several sessions, but we do see a level here for some decent support as it's a prior high. It's a very interesting time here. This dollar weakness, the US dollar, is pushing a lot of assets to move. So gold, for example, found some support. Oil prices are finding their way higher, and equities are rallying all on the back of a weaker dollar, as they should. All right. The interesting thing here is crude oil is up 0.1% at the moment, up even higher now in the 66.12s off that pit open, and we continue to rally higher. Here's some bearish news, and I'll give you some bullish news for the oil market. However, you got to understand that the most important factor right now is the weak U.S. dollar. If the crude market's going to continue higher, the dollar has to stay weak because there is some bearish news as well. The U.S. Department of Energy, the DOE, they also do the inventory reports on Wednesday morning. They're offering 11 million barrels of crude for sale from the nation's SPR. It's called the Strategic Petroleum Reserve, SPR. And that puts supply on the market. The reason they're doing that is because they're concerned about the impact of putting sanctions on Iran. If they put sanctions on Iran, there's less supply of oil, which would push the price higher, which puts pressure on consumers and the economy. All right, a strong oil market is not the best thing for all overall economy. All right, it's a result of a strong economy, but strong oil is not good for economic growth. And so they're getting ready, and they've put 11 million barrels up for sale. It's not a massive amount, but it is the sentiment that puts into the market. It's saying that the U.S. wants oil prices weaker, and they're willing to sell their petroleum reserve. All right, the SPR was established in the 1970s after a massive oil embargo, And in 2011, it contained about 730 million barrels in the reserve along the Texas and Louisiana coastlines. So with this storage, the 727 million capacity, that can offset the Iranian decline on sanctions. However, that's a temporary measure. All right. The problem with that is they can't do it forever. They only have 727 million barrels. And that's why that's a little bit bearish of a factor for oil, because supply came out. But anticipation of these Iran sanctions, Iran, somebody said it's not Iran on the comment. Thanks for the most useful comment ever. So essentially what this means is oil is going to be bullish when these sanctions come on in November, but the U.S. is acknowledging they have to do something about it. Here's another bullish factor for oil on the flip side of the one I just mentioned. China is importing oil from Iran at the moment. All right. And that's a bullish factor because they're finding a buyer. And that loss of supply is going to be soaked up by increased demand in China. All right. So right now, what the market's trying to establish is not what's going to happen in November, but what this means from right now to November. How are we going to cope with that? And that's why you're hearing one side want to add inventory, the other side saying China is going to take inventory from Iran, whatever they can't export. And all these things, it's a battle in oil traders and mostly massive institutional players that want to position their portfolios in the right direction. Also, producers need to hedge. That raises uncertainty in their outlook, and that's what's causing volatility in the oil market. In the wake of this sleepy S&P 500 and equity market, these days you should be trading oil as well, if not primarily, because that's where the opportunities are. Yesterday we had a sleepy start, but huge opportunity throughout the day. So you should be looking at crude. All right. Gold prices are up 0.5% to over $1,200 once again. That's on the back of Donald Trump saying he's not thrilled with interest rate hikes, pushing the US dollar down, pushing base and precious metals higher. All right. Base metals are up with London copper going above the $6,000 a ton mark. And prices for zinc, nickel, and aluminum are all higher on this weak dollar. So the question that I want to pose to you guys is it time to buy gold? Well, the answer is yes, as long as the US dollar stays weak, because now we're entering into strong seasonality for gold. The best 2 months of the year for gold prices on a 30-plus year seasonality chart are right now, August and September is the key month. So we're not pushing ourselves to buy gold blindly, but in the next couple of days, we're looking for some support structure to try a long trade on gold with some stops below. And that's what we're going to be looking for. We'll keep our subscribers posted through our weekly newsletter and daily newsletter updates, and also in our trading room. So we're excited about that. All right, today is a record day. The S&P 500 will tie the record for the longest U.S. bull market in history at nearly 3,500 days. Since March 9th of 2009, the low of the S&P 500, we've gone up 320%. And it's not as fast as the previous bull market, which went up 413%. But the fact is that we know it's a bull market. This thing's a bull and it continues higher. And at some point, we're going to see an opportunity for the downside and a lot of selling. At the moment, though, this bull continues to forge ahead and charge higher. You got to understand, you might trip a bull, it might stumble, but it's got momentum. It'll keep going until it falls. And that's the danger of going out here and trying to bet against a rally. The easier money is made on just jumping on board for the shorter term. Now, if you're a long-term investor that's got a horizon of 30 plus years, I can tell you with 100% certainty that in that 30 years, you're going to experience a downside, multiple downsides more than likely. So you're not concerned. But if you're an active trader, do not try to short this market. The time is not yet. Ride it out on the bullish side. And as crazy as it feels to pay such a high value, it's going to go higher. All right. That's kind of the sentiment. Sentiments to the upside right now. Don't fight it as long as that US dollar is down. US dollar starts turning and going up, then you have an opportunity to look at some short trades. All right. Interesting fact, it was a 50% drop in the 2009 housing bubble crisis, followed by a 320% retracement or rally back to the upside since then. So I'll tell you this, markets rally a lot more than they go down. Traditionally, that's what history and research shows us. It doesn't have to be like that in the future, but that's what it has been. And the reason being is a lot of institutional money just continues to buy dips. Institutions now are long to the years with stocks, And when they're ready to start selling some of their positions, the next drop in the market is going to happen fast, sharp, and deep. All right, that's what you have to know. But for the time being, up we go. That's all I got for you guys today. Nothing on the economic calendar, very slow day. We're going to have the next big news item tomorrow at 2 p.m. Our elite subscribers are going to be with us. We're going to trade that together live in our elite room, and it's going to be exciting. Last time we did it, we did quite well. What else I got for you guys? We have a price increase coming September 3rd. So you guys want to get on board and join the TRADEPRO family. It's the cheapest it will ever be until September 3rd. We do not discount prices. We do not give coupons. We don't do any 50% off type of sales. So just full and plain disclosure, as a business owner, I don't believe in devaluing my product. I will never devalue the product. I always add more value and I charge for it, whatever is appropriate. And the price is still cheap after the hike. It's when I did some competitive research, we do it every once in a while. Like, man, we could raise these prices 300-400%, but that's not the right thing to do. We want you guys to come on board and experience this, experience the TRADEPRO edge, and it not hurt your wallet. Because I'll tell you guys the truth. This is my philosophy on trading. I am not going to teach you how to trade. Hate to burst your bubble. I can't do that. Nobody in this world could teach you how to trade. They could show you the door. They could show you what to look for. But the person that teaches you how to trade, it's not you either. It's the market. At the end of the day, you got to get your butt in the chair and watch the market to learn from it. Therefore, the prices reflect that. All right, so I want you guys to come out and check it out until September 3rd. You have an opportunity to lock in the lowest rate ever. You're grandfathered in. And then as of September 3rd, prices will be increasing. Okay, guys, so I got for you today. I want to give you a fair warning. We're getting down that time inside of 2 weeks. Very exciting time for us. We have a lot of changes coming mid-September after the price increase. We have a huge change to our business model. I'm very excited about it, which means I'm going to be laboring away until then, working really hard in order for those changes to be the best they can. All right, guys, have a great day. Look for the upside. I think early morning sell-off could be bought. Look for the 10:30 a.m. reversal around there. You could start getting long. Oil is the market to trade today. Got a feeling it's going to make some big moves. That's all I got for you guys. Have a great day. Manage your risk. Trade like a TRADEPRO, and see you tomorrow morning at 9 a.m. sharp, bright and early. It's not really that early, is it? It's not. I'll see you then. Take care. Goodbye. Patent the chair spin in 3, 2, 1. Hey, Marky. Welcome to the battlefield. How you doing, brother? Doing all right. Marky just made it, guys. Always an exciting time. Goodbye, YouTube. Have a good day.